your number one station, Smart 24. You've chosen business instead of fun. That is a very good sign of growth, personal and also business growth. So we are still talking about financial markets, but before we went into the break, I told you about the Zabu app that was launched. That Zabu initiative, that was launched by Altex East African, Altex Clearing Limited. We were at golf course, of course, when they were issuing this, when they were launching this, initiative, of course, in the presence of the Deputy Speaker of Parliament. And I got an interview with a very interesting gentleman known as Jetin Jivram, or he prefers to call himself JD, one of the co-founders of Altex, but also one of the people who have been driving, one of the directors of Altex who have been driving this launch of Zabu. Zabu, as I said, is simply an initiative by Altex to help users conveniently use their small mobile phones without access to the internet to access these bonds, these securities, including stocks, treasury bonds and bills, and start trading at the convenience of their smart or small phone without access to the internet. I will ask my producer to give you this interview as he explains what motivated them to actually get into business as Altex of helping people access stock markets, bonds and bills with such convenience. Ladies and gentlemen, and welcome to the program. My name is Anthony Sebale, and I'm your host for Financial Markets. We have been here part of this event, the launch of the Zabu, which is an initiative by Altex East Africa and, of course, Altex Clearing companies. I'm now seated with Mr. Jetin Jivram, who is one of the directors at Altex, as well as one of the co-founders. You're most welcome, Mr. Jetin.
Thank you.
Well, tell us about, first of all, your story in Uganda, how you came to be, in Uganda and to start business in Uganda.
Well, it's not just to start business, but I was actually born here. I was born here. I spent a couple of years over here, and then my family left, with the 72 Exodus. But we shifted to London, and I grew up in London. It's now been about 22 years since I decided to come back and not only live my life in Uganda, the country of my birth, but also to invest and also to seek opportunities and just live in this beautiful country. It's such a wonderful country, So.
Wow. So, given the fact that you've said you actually started investing in Uganda, what triggered the start of Altex as you one of the co-founders? What triggered your minds to actually start to come up with an exchange that would trade the way Altex does?
The opportunity arose just as a business, and then my contribution and my partner's contribution was to see that we can set up a business, but then how can we benefit people at large? And so realistically, it was a wonderful opportunity to attempt to bring about financial inclusion and try and reach people out and have some sort of normality to how a Western country can operate. So we had to envelope. We first had to envelope a lot of the issues surrounding why people cannot prosper by their own hard work, why people don't have a lot of opportunities to save. Now, when I say a lot of people, I mean obviously people who are majoritively in rural areas. They don't have access to Kampala. They don't have access to information. They don't have access to technology. But it was a real passion to turn around and say we need to do something to help our society. And my parents had always guided me and turned around and said to me that if you don't save money, then you will end up not being anything, because it's very difficult, so you must be able to save money. So Altex was a fantastic opportunity for us to enable people that had been excluded to now become inclusive. And with Zabu, Zabu is a great innovation that all forms of technology are enveloped, all forms of access to securities where those securities were not available to a huge chunk of society. Now it's available to anybody and everybody. And the message from here on is actually going to be that we now have to go and educate people into how savings can be vital in life for them. So that was the thought process, the initial thought process of Alltex.
Yeah, talking about saving and investment, Ugandans have a very poor saving culture, noted according to the Uganda Bureau of Statistics. We have over 12% compared to other countries in East Africa like Rwanda, Kenya, and Tanzania. They're doing way better in terms of saving and investment as well. Do you think that Zabu will address that to see that Ugandans save more? And as well, do you think that actually, we are going to see more local investors, on our own exchanges come on board?
Oh, 100%. 100%. I think over here, one of our challenges has possibly been a reluctance to change and to use technology, especially technology. We're kind of like set in our ways that, and so eventually news information will start to reach out. You see, so we find that Kampala and its suburbs are, yes, very well developed in the sense of media outreach, the information that people can have access to. So Zabu will definitely address these issues. The other issue is that where Zabu is very innovative is that it gives access to securities. And one of our messages was that whatever the security is performing at, or if we have bonds, treasuries, whatever its face value is, the end user will get that benefit. So now savings now is enabled with a tangible return. A lot of society has to live on a day-by-day basis. Very difficult for them to save when they live on a day-by-day basis. So yes, those are the target audience to turn around and say that you now have an opportunity. You don't have to be frightened of filling out forms. You don't have to be frightened of walking into a big building to open an account. You don't have to be frightened of a stock exchange. Because even in Western countries, a vast majority of their population is still scared of a stock exchange because they feel that it's for the elite and it's for the rich people. But we want to change that dynamic. We want to disrupt that, and we want to turn around and say, no, it is accessible even to a casual farm worker who now has such a great opportunity to save money, to earn interest on their savings, and to build prosperity for themselves in the future. So it will 100% change the dynamic.
Yes. Mr. Jetin, as we conclude, can you take people through the steps that need to be taken actually to get, to participate in the Zabu, activation, how you get started with your mobile phone?
Yes, so we have smartphone applications. This is what Zabu has done. Zabu has now utilized USSD. So all it means is that all somebody has to do is to dial *292# and then follow the menu systems. And when they follow the menu systems, all they need to do is that they need to upload their national ID, the national ID numbers, and then the national card numbers. They set up their accounts. After 24 hours, the account will be created. There will be no forms to sign. There is, so the convenience of technology has now enabled them to do that. And then from there, what they do is once their account is open, then what happens is that they can use mobile money to now starting to buy securities but just using their phones, and that is it. They do not have to travel. If we have a casual farm worker now, say in whether it's Kapchorwa, whether it is up in Gulu or any part of the country, they now do not have to travel to Kampala. They can do it from the comfort of their own home.
Thank you very much, Mr. Jetin, and we hope to see you again, probably as we see Altex as well grow, to further innovations such as these. Dear viewer, that was it from Mr. Jetin, one of the directors of Altex East African Clearing Limited. So we have been talking about Zabu, and he has actually told us how you can get started. It's convenient and fast. So what are you waiting for? Let's get rolling on the stock exchange and start investing. Thank you. Thank you very much for that. That was an interview we held with Mr. JD, a very passionate man when it comes to, of course, Uganda and investment and business. Telling Ugandans out there that now they have an opportunity to take part in investment with, the smallest mobile phone they can access, in their hands. So that's exactly what we are up to here on the show, getting to use some of that saving and invest it wisely in the financial markets. Remember, it's a decision you have to make to move forward. So as you can actually get out of those ruts of hand-to-mouth income where you only earn to eat and maybe take back something in a kavera at home. But we want you to save for long term, save for your retirement, save for your future, save for your children in terms of investing in some of these stocks and other securities as well on the market. So Zabu is there for you, and of course we'll be following up with more of the innovations on the platform, and we see if other companies as well can come up with some of these innovative ideas to help accessibility, break the accessibility bottleneck and make people access the stock markets, the securities in bonds and bills at the convenience, of course, their users. Moving on to another top story that is making headlines, the Kenyan government has abandoned a proposed €1 billion bond, citing its cost. Now, Kenya has scrapped plans to issue a $1 billion euro bond that was expected by the end of June, as the rising cost of financing foreign debt, coupled with a relentlessly depreciating currency of the Kenyan shilling, dampened the sustainability of the planned issuance. Dr. Haron Sirima, who is the Director General and at the Public Debt Management Office of the National Treasury, told one of the papers in Kenya that the ministry reached the decision due to high volatility in the international capital markets. Already, yields on the 10-year bonds maturing in 2024 and 2028 have risen sharply and continue to spike amid the Ukraine conflict and the announcement of the major central banks, including those in the United States, like the Federal Reserve Bank and the UK, signaling higher repayment costs. Julius Muia, who is the principal secretary at the National Treasury, had earlier expressed fears that the growing yields of existing Eurobonds might actually compel government to explore alternative borrowing sources in order to finance the budget deficits. Now, they are still keen on the international market for funding resources like bonds and so on, but are cautious about the yields, which are currently elevated. They have also to be very careful about the yields to keep their financial sustainability, according to Mr. Muia. Now, the Kenyan economist Tony Watima actually told the paper that in the prevailing conditions in the Eurobond market, it would be unwise to go to the market. Kenya's debt restructuring plan is to move away from foreign-dominated commercial loans, which come with high risk, and go for more concessional loans. So issuing another Eurobond at this time means we are scaling back on the restructuring plan, according to Mr. Watima, who is a Kenyan economist. Now, in this financial year, the Kenyan government has spent about 9.8 billion US dollars, about 31% of its national total budget, in debt repayment. Treasury estimates that it will spend up to 11.6 billion US dollars, about 64% of the expected tax revenue, to repay the country's loans in the financial year beginning 1st of July. Now, rising dollar shortage, partly blamed on the rising cost of servicing external debt, is crippling manufacturers' operations, with some even mulling closing shop and others demanding repayment from customers in dollars rather than in the shillings. Of course, the economic problems around Kenya are similar kind of to what we are facing here in Uganda, with a very high public debt and especially the foreign debt. Much of our budget, you can find that now for Kenya's case, in the last financial year, 31% of the budget was financing foreign debt. And this financing of foreign debt has actually led to weakening of the Kenyan shillings, because you don't borrow in Kenyan shillings, you borrow in the dollar. When you borrow in the US dollar, you have to buy that US dollar using your currency, which is the Kenyan shillings. And so whenever you get to actually buy the dollar so that you can pay the debt, you're trading out your currency. Whenever you trade out your currency, you make the other currency to go on demand. The higher it is on demand, the shorter in terms of the market supply it becomes, and the more scarce it becomes. And the scarcer it becomes, of course, that would be bad for your currency, because as a weaker currency, the Kenyan shillings will actually have to pay for being, putting the dollar on demand. And therefore, the Kenyan government is now in a situation whereby the debt is already going overboard, but as well as they finance the debt, they are trading their currency out. And this trading of currency has created a weakening of the shillings back there in Kenya, which has crippled a lot of activities, supplemented by, of course, price inflation, of course, also the global economy pressures from the Russian-Ukrainian war, rising fuel prices, and all these other economic problems that are coming together. So while Dr. Patrick Njoroge, who is the governor of the Central Bank of Kenya, has denied claims that the dollar is in short, or the shortage of the dollar, the Kenya Association of Manufacturers, that's the KAM, say they are unable to access enough dollars in the market at the official price. Debt distress and risk, of course, the National Treasury will nonetheless have to continue borrowing to bridge the 7.4 billion US dollar budget deficit in the year 2022-2023 financial year. But we'll now have to explore other options as well. He says, and I quote, "We continue to borrow externally with strong bias on concessional loans to support balance of payment position and safeguard crowding out the private sector." That's according to Dr. Sirima. In addition to the loans given on better terms, Dr. Sirima said that the growing revenue collection has been observed, of course, in the last few months, will, of course, help narrow the budget deficit. According to the International Monetary Fund's latest report on, of course, debt sustainability, released in March 2021, Kenya's risk of external and overall debt distress remained high, of course, exacerbated by economic shocks, declining exports, and economic growth prospects. Kenya has the highest debt shock in the region, that is in East Africa, at about 70.7 billion US dollars. That is 68.4% of gross domestic product, and has a high risk of debt distress risk. Of course, this is according to statistics from the International Monetary Fund Debt Sustainability Report that was issued on March 21st. Now, Burundi also has a high risk of external debt and overall debt distress, with a debt stock of about $1.9 billion US dollars, which is a 67% of its GDP, according to International Monetary Fund's latest statistics. Uganda, on the other hand, with a debt stock of about $20.7 billion US dollars, that is about 49.7% of GDP, is the least exposed to debt distress in the region, with a low rating from the IMF. Yeah, I think we should applaud ourselves, but not so much as well, because we still are ranking down on the list, but as well not at the top. You can see the debt stock is $20.7 billion US dollars, and that is 49.87% of the GDP. While for Burundi, it is 1.9 billion, less than our value, but it is 67% of their GDP. And while for Kenya, it is 70.7 billion, which is 68.4% of their GDP, which is quite a high percentage. Tanzania, on the other hand, was recently moved to a moderate risk level after its debt stock rose to 60.6% of GDP. That is up to 37.8 million US dollars in March. Rwanda's risk remains moderate as well, although, of course, according to IMF, the estimate of its debt stock reaches about 80% of its GDP will reach about 80% of its GDP by about the end of this year, 2022. But still, the Kenyan Parliament voted on June 7th to increase the country's debt ceiling, okay, from about 9 trillion Kenyan shillings, that is 76 billion US dollars, to about 10 trillion, that is about 85 billion US dollars. And of course, to allow for borrowing of about 7.4 billion US dollars deficit in the budget for the financial year starting 1st of July. Parliament had previously actually raised the ceiling from about 6 trillion Kenyan shillings, that's about 51.2 billion in October 2019, when the debt stock stood at 55% of GDP and was expected to hit 55 billion in about 8 months. That is Kenya, they are grappling with their debt, but as well other East African countries that are grappling with debt. They're wondering, should we get more of the foreign debt, or we should get more concessional loans by issuing more treasury bonds? That is the argument here. And Kenya is saying no more, of course, external foreign debt because they already cannot service the debt. And of course, due to their weakening of the shilling against the dollar and the other economic problems, they are looking at issuing bonds here locally. And that's an opportunity as well for investors here. Of course, you can always find bonds and all these other things on the USE platform. For example, for the Ugandan case, if you want to trade in treasury bonds or bills, you can always go yourself and make some research and get to know which bonds are currently being traded. As well, remember, you can go through a stockbroker who can do all the work for you and get you access to all these investments. We're going into a short break. We'll return shortly and talk a little bit more about our top stories, and then we shall move to the African Stock Exchange, looking at other African stock markets, how they have been faring over the last weekend. That is the Nigerian stock market, the Johannesburg stock market. We want to look at what is happening over there as well before we move on. Don't go anywhere. We'll be right back.